Hey buddy, welcome to the property chat with me, K to the Jizo, and in this week's video, man, we're going to be looking at rates. And rates, man, last year in 2024 from January to July, they outperformed all asset classes, all asset groups. Rate, they just walk all over them, they destroyed it. Why am I speaking about rates? Because I'm investing in rates. I invested in rates and I love rates, man. For me, rates are more like your passive income. So you're going to look at what exactly did they do, how did they do it, and what changes did they do, and what's the performance looking like. And we will also compare it with the other asset classes and how they did. Okay, so if you are new, welcome to the property chat with me, K to the Jizo. But I would say to you, before you watch this video, please go ahead and check out this video first. In this video, I said, how can you start investing in property with 10 rents? Just 10 rents, not much. And then I went through the details and I showed you everything in the rates. Like, if you watch this video, we are going in. But just to iron things out, what are the REITs? REITs, R-E-I-T-S. Real Estate Investment Trusts. Go back, check it out. Google it, you will see. I just want to go into details now because I'm excited. But before I get excited, man, this is one of the videos that I put in the slides together, read, and I put all the things together. I don't know what really happened. I missed it. I just checking now. I'm like, wow, I created this script about rates performance and I didn't record it. That's why I'm recording now. You know what they say, guys, poor. It's better to be late than sorry. So what's the actual performance from last year? So the rates, man, they had a super impressive performance. And those rates that I'm looking at is those that I'm either interested in them or the rates that I'm investing in them. So that's Attack, that's Fortress, that's Vukile, that's Growth Point, and Redefine. Those are the ones that I'm looking at. So let's go into details, man. Let's go into details. So the actual performance of the REITs. Sometimes I don't say properly. If I don't say properly, please forgive me. I beg of you. So REITs, they went and they gave us a massive 14.4%, and they were competing against the bonds, like the government bonds in South Africa, and those, they did their best, but also investing in South African bonds as well. They came at 9.8%, and equities, which are your shares, which I'm investing in them as well, they gave us just a flat 10%, just a flat 10%. And then lastly, it's the cash. The cash didn't do so good. It just gave us, they didn't do so good. You know what they say? They say cash is king. Cash is king. We know that cash is king, but in this context, it is not, because they gave us a okay 4.9%. But then what did they do? What exactly have they changed? Because quite a lot of things has been happening in the property market, especially from COVID-19 to now as well in 2025. This is April 24th. I'm recording this video, and things are not looking so good, man. We are expecting, or we're looking at global recession. We don't know if it's going to come because the US is doing its own thing. But let's focus on this one. My family is back. They're going to come here and disturb. Watch and see. Okay, what did they do? So they did apply the strategies that gave them massive changes, like 3 strategies. One, they reduced the vacancies. So especially after COVID, they dropped all the vacancies. That's one. We'll speak in details in a moment. Number 2, they expanded on their student housing. Student accommodation is a killing in South Africa, and it's in demand, man. It's in demand. And one that really shocked me when I looked at it, I'm like, I wasn't expecting it. That's why I'm saying shocked. They investing in rural retail spaces. Let's jump into the details, and this brought about this performance. So let's start off with expanding into student accommodation. I cannot speak about all of them. I'm speaking about the one that I'm involved, that I'm investing in, and I'm just giving one example. You go ahead and check your own. So in this instance, I'm looking at Growth Point. So Growth Point has a a band. Within Grove Point, they have like a tiny umbrella which is called Thrive Student Living, and they just want to address the student accommodation in South Africa. In South Africa, there's massive shortage. In 2025, this year, they're working. It's open now. It's open. I've checked the website. I've checked quite a few student advertising on TikTok. It's open in 2025 academic year. And one is the Crescent Studio in Braamfontein. Once you're in Braamfontein, it means you're looking at students at Wits University, you're looking at students at UJ. In that accommodation, they have the Crescent Studios. They have 900 beds. So they put in 300 million into that space. The second one is Ateria Parktown. And that one is 500 beds and it's 200 million. 200 million. So both of them, the catchment areas is UJ and Wits University, strategically put. Thrive student accommodation, they have places and accommodation in Johannesburg, accommodation in Pretoria, accommodation in Cape Town, and they're looking at expanding into the KZN. Cool. So Grove Point, they made a plan, a commitment of putting 800 million rands investment at Howard College campus, just next to at the University of KwaZulu-Natal. And they like, this one is their biggest. The Braamfontein one is 900, the Parktown one is 500, this one is 2,500 beds, and it will be completed in January 2025. So this is what they're doing in space, in accommodation space. Then we looking at the one that shocked me, the one that surprised me, I didn't expect it. It's investing in rural retail spaces. Let's use an example right here. Let's use an example here, and a place that I know, and I'm going to go with the place that I do not know. So the place that I know is one of the rural retail spaces is Moruleng Mall in Northwest at Bakhatlaba Cafe, near after Sun City, near Pilansberg, right? So they built the mall, I think around 2013 they opened the mall. And this is, they've strategically put, when you look at this, it's quite looking exciting. So Moruleng Mall is looking at Moruleng, Bakhatlaba Cafe, they have like 32 villages. 32 villages, if they put a mall in Moruleng, so it means all the 32 villages around, they are not going to go Rustenburg City Center to get things there, to get your banking services and stuff like that. They will just go in there. So this is more like decentralization of services, which I've learned about decentralization of communities, of building in in the cities. Go grade 10 geography. Now I see it in reality as a 37-year-old man. And those places that are going to be served, for instance, I'm looking at the picture here, I'll put on the screen. That's Moruleng, that's where the mall is. So Ramoga will be serviced, Lesekeng, Lek Kral, Sanfontein, Mohwase, Mabela Pudi. Hey, I forgot my store alone. All of those will be, and then those again in Leader, in Sun City, they can also come over here. So people in Leader, they'll be doing like the calculations. What services do I need? What's the distance between the Moruleng Mall and Rustenburg? Whichever that's convenient for them, then they will go into there. Okay, and who owns this mall? Vukile owns the mall. I own Vukile. I've got shares there. So Moruleng Mall has 80 stores, and all major retailers, and they're looking at providing the residents with choice, quality, and convenience. Let's check out the ones that I do not know. I've never been in KZN, and when I get home in South Africa, that's the next space I want to go into. So in this instance here, we're looking at Princess Mkabayi Mall. Princess Mkabayi Mall also is looking at servicing quite a lot of villages around Princess Mkabayi Mall. So the villages they're looking at, like Newcastle, they're looking at Dundee, Ngutu, Ulundi, Nongoma, Pongola, and all of those, they're looking at servicing those. So instead of these people in this place, instead of them traveling from where they are and go to Pietermaritzburg and go to Durban, to the city to do just banking, they can do it over here. And it's looking at servicing people at 100 kilometer radius, and it's a mixed use development. Quite exciting, a beautiful strategy. Who owns this small? Moolman Group owns the mall, and Moolman is Moolman. I have no interest in Moolman. I don't know them that much compared to the one that I own, Growth Point. Quite exciting. It's huge. Moolman probably later. We'll see how it goes. So this mall in KZN, man, at the Princess Makabai Mall is 30,740 square meters of retail stores. They've got a lot of things going on. So let's look at them individually. What have they done? How are things looking like for them? Starting off with my favorite, Growth Point. Growth Point reported a drop in vacancies. So now the vacancies is 8.7. So they've dropped. Considering the COVID and COVID punch and COVID consequences that we experienced, they dropped all their vacancies to 8.7, and they're looking at renewing all of their lease with the current tenants. They say, let's keep going, let's have this relationship, we're not ready to let you go, only if you are paying though. If not, let's say our goodbyes. And they also announced a massive construction investment of a whopping 4.5 billion at V&A Waterfront, go Cape Town. And then in response to student accommodation shortage, they go in beast mode. They want to put in 1.2 billion in the market by 2026. Let's look at ATTACQ, ATTACQ. They reported 19% increase in their full year dividends. If any company that you're investing in and is giving you dividends, it means the company is doing well. The company has profits, because dividend means they have to share out the profits with people that invested in. So increment of the dividends by 19%. That's a lot of money. Okay, and they went and repurchased all their shares that mounted to 5.4. They acquired a further 25% in a Waterfall Junction. They're just taking everything back so they can build. The occupancy rate rose to 92.8%. It's like they're fully booked. They have tenants, so they're doing quite well. Want to check in their details, check the website there. I will put in the description below. Vukile, I like Vukile. And Vukile, it has assets in Spain, and its domestics is in South Africa, and it's driven by informal cash economy. What is informal cash economy? You want to take a guess? Let me know in the comments section below. But I will let you know in a second. So informal cash economy, we're looking at tuck shops, man. So informal cash economy or cash retail economy is driven by special shops, and is said to be worth an estimated 750 billion in total. So that's what Vukile is putting their money. Wherever you are, you need those quick services. And then tuck shops are doing exactly that. Tuck shop is not small businesses. It's massive business that you can take advantage of. Imagine you own 1,000 tuck shops in all Gauteng townships. What will that be? How would that look like for you? Okay, Redefine has allocated 750 million in capital expenditure of its office portfolio of 87 properties in 2022. Redefine is the best when coming to office space. Right. So 2023 they put in a lot of money into their office portfolio. The office sector of Redefine accounts for a large portion of Redefine's portfolio. What made them more money is the combination of a boom in the Western Cape's office sector, and the return of workers to offices in Gauteng has led to increase in demand. Remember COVID-19, what happened, we saw like vacancies were like skyrocketing. There were no people in the offices because people were encouraged to stay at home, work from home, work online. And even when they were opening up, because South Africa was in lockdown for a very long time, they would open up, change level, like we're in level 4, we're level 5, level 6. There was quite a lot of changes in there. But once all of it was done, there was a massive demand of going back to the offices. That's where Redefine made a kill. And their office occupancy rate at the moment in 2024 is 87.8%. Check out information. So why the increase? What really happened? A lot of things happened that boosted all of this, which one, the stronger rent, and there was reduced interest rate. I think they went on about two times, and there's overall investor positive sentiments, like they're feeling good about investing in South Africa, not just the locals, but people across the world who are investing in South Africa. And political stability, also one of the favorables that added into all of these contributions, like your GNU. It has impacted on, there's no load shedding, stronger rents, reduced rates. Quite a lot of things has happened because of that. These are my passive income stocks, and I couldn't be happier. I could not be happier, man. When money comes, all smiles, you're happy, there's no stress and depressions. And yeah, I'm happy about the results. I'm looking forward to more positive results. If you're holding any of the stocks, please let me know, especially the one that I just discussed. Let me know which one you're owning and why you're keeping on holding those stocks. Like, what's the future plan? Are you going to sell? And if you sell, why are you selling? Are you going to hold on to it? Why are you going to hold on to? And if there's any specific REIT stock that you want me to discuss in the details, let me know in the comment section. I will do exactly that for you. If you haven't checked that video that I said you can invest with as little as 10 rands, please check it out over here. And as always, thank you so much for watching, for liking the videos, for commenting, for subscribing. We will definitely see you on the next one. Take care.